AIG's chief executive, Robert Benmosche, has been out and about over the last week talking up his company to potential investors. Next Tuesday, 300 million shares of AIG will go on sale. Two-thirds of that offering will come directly from the U.S. government, which still has a 92% stake in the company. Well, how have potential investors been reacting to the Benmosche roadshow thus far, and will the U.S. government break even on its AIG bailout? Here to share his perspective is Paul Newsome, analyst at Sandler O'Neill Partners. He joins us now from our studio in Chicago. Paul, good to have you. Thanks for joining us. Interesting time to do this stock sale, particularly given the stock performance year to date. It's down almost 40% since the beginning of the year. So why now?
Well, I think there's an emphasis from the government to get out sooner than later. And you can see from the financial results of AIG that there's, things are improving. The government has largely been paid off, and so this is probably the first time that they can do an offering post the great restructuring that happened to pay off most of the government's lending.
Paul, there was some interesting article in the Wall Street Journal just yesterday about Benmosche saying he thinks AIG's book value is actually closer to $46. So I know you've got a $40 price target on the company. Do you think the market is just not valuing the stock properly, or are investors just a little nervous about getting in at this point?
Well, I think it's both. I think people are putting a very low multiple on their core businesses in life and property casualty. I also think that there's understandable concerns about the offering itself and what that will do to the share price. It's a lot of shares that potentially could come on the market in a sector that has relatively small capitalization.
Is there anything coming out of the roadshow that you've heard of that sheds some lights on uncertainties? There's a lot of questions still about what types of risky assets they have on their balance sheet.
I don't think there's one headline, but there's a lot of details. This is a very complex company, and just the fact that you have management out there walking through the different pieces and explaining it to folks, I think is a major help, and it at least eliminates risk that there's things on the balance sheet that you don't know about as they go through and at least give us some insight as to what's actually there.
Paul, you just lowered your EPS estimates and your price target on the stock. You actually had a $42 price target, lowered it to $40. Why the change?
That's the dilution related to the shares that AIG itself is offering. They're raising about $3 billion or so. It's 100 million shares of brand new capital. And it's a dilutive transaction given the low share price.
All right, Paul, thank you for joining us. Interesting insight there. We'll see. I think the government's break-even point supposedly right around $28.50. We'll see if that happens next Tuesday. That was Paul Newsome, senior insurance analyst at Sandler O'Neill Partners. He has a buy rating, by the way, on AIG stock with a price target of $40.